Guys, good morning once again. This is Leverage SFS Academy. Guys, I got some feedback from forex traders and crypto traders. I observed that a lot of us are blowing up our accounts, and one what could be the reason is not because you are not a good trader. A lot of us have psychology issue. What I mean, the psychology of trading, not like someone who is mad. You understand? Okay. So, psychology of trading, a lot of us are still very unpredictable. We we doubt ourselves because the market will always test you. The market will test you to know if you have confidence in your strategy. And I want to let us know that a lot of us have strategies that are very effective, that are workable, that are good strategy, but they are not making money. So one of the problem why a lot of persons are not making money from the forex trading is one psychology issue. They don't have confidence in their strategy. The market tests them and they always fall. Okay. So when they place a trade and they know that this trade is going down or this trade is going to bull, they begin to doubt their analysis, they begin to overanalyze, therefore leading to paralysis of their strategy. So this eventually makes them to lose money. That is one, psychology. Then secondly, another problem traders are having in trading is what I will call trying to put a peg in a square hole. Okay, trying to use a higher timeline for a lower time trade. Okay, you're trying to trade. You are a scalper. You're trying to use a higher time frame to scalp. It wouldn't work. It won't work. So if you are scalping, you go to the lower timeline. Look for your market structure. Wait for the market structure to be broken. Then you take your trade. You understand? The higher timeline is just to give you an overall view of what the market is doing, helping you to know the trend bias in the market. That is what the higher timeline should be for, like the 1 day. Now, you want to get in and out and make some profit from the market. You need the lower timeline. So do not place your trade in the higher timeline and expect profit in the lower timeline. Or you place your trade in the lower timeline and expect profit to be taken in the higher timeline. It doesn't work like that. That is why many of us will see profit in our account. Eventually, it's wiped out again and turning in the opposite direction and blowing off our account. Why? Because we are using the wrong time frame for the trading psychology we have. So to put this into perspective, let me show you what I'm talking about. Now, looking at the 1 day timeline, you can see that the market is in a little uptrend right now. Can you see? In the 1 day is in an uptrend. Then when you go to the 4 hour timeline, you will observe something different a little. Let's go to 4 hour. So when you see 4 hour, you find that the market is in a little bit downtrend. Are you getting it? So now if you're placing a trade, if you're a scalper, you should place a trade in the lower timeline. Now this is the 4 hour timeline. You can see that a market structure is already being created right here. Okay, a market structure is already being created right there, showing that the market will likely come down and retest this support. Now you can take a short trade from here to here, from this point to this point. You can take a short trade. Now, going to the 1 hour timeline, let's check the 1 hour timeline. You can see that the market is really in a little downtrend. Even though the 1 day timeline is telling us that the market is in a little uptrend. Can you see? Even though the market is telling us that the 1 day timeline is telling us that the market is in a little uptrend. Can you see? But going to the lower timeline, we're made to understand that the market is in a little downtrend. The current trend right now, looking at the 4 hour, the 1 hour, the market is in a little downtrend. So if you are a type of trader that want to get in and out and you have a small account, please take note. If you have a small account, you should trade the lower timeline. You should trade the lower timeline because your account cannot hold if you are taking trade from the higher timeline. Your take profit, your stop loss, you're trying to get it from the higher timeline. Your little account cannot hold the market fluctuation. During those periods when the market begins to fluctuate, you're going to be blown out. It's going to mess with your psychology. You're going to be getting in and getting out of the trade, thereby messing up your strategy, making you begin to doubt yourself, making you begin to doubt everything you're doing. So that is the beginning of a losing trade. So guys, I want you to keep these points in mind, and this can go a long way to help you in your trading. All right guys, this is Leverages FS Academy. Please like the video, share the video, drop your comment. What do you think about this video? Drop your comment in the comment section. Please follow us on our YouTube channel, Leverages FS Academy, on our Instagram, Leverages FS Academy. So guys, I'll see you on our TikTok too, Leverages FS Academy. Please like the video, subscribe so that this channel can grow. Thank you very much. Be safe, take care, and see you on the next one.